Welcome to the Krinzman Property Playbook, your inside look at South Florida real estate. I'm your host, Matthew Krinzman, bringing you real strategies, real insights, and real connections that help you buy, sell, and invest with confidence. With over 2 decades of experience as a licensed realtor and broker associate, I've watched South Florida grow from a quiet getaway to a global destination, and I'm here to help you navigate it like a pro. My business thrives on trusted relationships, with many of my clients being repeat and referrals. This podcast is brought to you by me, Matthew Krinzman, a Sotheby's International Realty agent. For more info, visit buysellmiamire.com. Let's dive in. Hello, everyone out there in the ether. My name is Matthew. I am the host of the Property Playbook. I am a real estate professional here in South Florida. I've been in the real estate field as a salesperson and a broker associate for the last 27 years. And I got this cool little podcast to talk about real estate and other things that go around in the world of real estate. Especially today, we're going to talk about taxes with Nancy Benet, who is a CPA based in Florida. You provide high-level tax accounting and business consulting, which is very good. You own and operate your own firm, accounting. I like that. That's a good name. And you have many years of hands-on experience that you've built your business accounting from the ground up. You help people with IRS resolutions, which I'm sure that's a real niche in the business to be in, because I know the IRS always wants their money. But if you can help a client or someone who's struggling paying their taxes to get some kind of fair resolution with the IRS and get them out of the jackpot, as I like to call it, then good for you. And you also offer, obviously, the normal tax preparation, bookkeeping, all that good stuff, full business advisory for small businesses, but also you do virtual CFO. You offer virtual CFO services to companies out there.
Yes, we do.
So first of all, you got a lot going on. How long have you been doing this for? How long have you been a CPA?
I first got my license in 1995 or 1996.
Okay. I started in real estate in 1997. So yeah. Okay.
A long time ago. Yeah. I'm also a real estate investor. So
right.
It really helps me with doing the property end of things.
Which is a big top for myself and people who are watching my podcast or listening to the podcast, and also obviously my sphere, because that's all I've been doing for 27 years is real estate. I grew up in the business more or less. Everyone in Florida somehow is either an attorney or involved in real estate. So that's like our state in a nutshell. Just a curiosity, the virtual CFO services, can you tell me a little bit more about that? What that exactly entails?
Yeah, most CPAs do compliance work. So that's looking backwards. It's doing your accounting and catching that up and your tax returns and things like that. CFO work is looking forward. We're looking at helping you grow and build your business instead of just reporting what's already happened. Of course, that needs to go on anyway, the reporting and dealing with the compliance end of things. But we really do focus on being forward looking and helping identify the areas in your business that aren't working. So if we can take the numbers and analyze them and really dig down in, we can see what product lines are working and which ones aren't, what's profitable for you and what's not. And we really focus on looking at drivers of revenue, cash flow, profit. Those are really important things to
act as
analyze.
Really, it's for businesses, smaller scale businesses that may have a couple of people, the ownership involved, but they don't have a professional CFO who can help advise them, as you're saying, to go forward and say, hey, this works, this doesn't work. Here's where you can cut costs. Here's where you can make money and save money or however else. And so you act as a CFO that comes in. We tag you in. Hey, be our CFO for, it's on a per basis. You're not permanent as a CFO for these companies.
Yeah, sometimes we are. We just contract with them to do their analysis and really help them with their budgets and their reporting and things like that, from anywhere from a project basis, which would be a few months, or to all the way doing it every month or every quarter for them.
Okay.
And this is for businesses. The really small ones, just is too expensive for them. But when you get over $1 million or $2 million in revenue, then it becomes more feasible and it really can help, because by that time you've worked out a lot of systems and things, and you're in a position to really look and dig down to be able to understand what's going on in your business, and you're not buyers every day.
So that at that point, it's like where they're at scale or they're scaling up. they've hit the revenue marks and profit marks, and they're now doing, like you said, $1 million plus a year. So they're getting up there, and they obviously want to keep growing. So that's where someone like yourself can help them do that, achieve those
Yes.
goals. Got it. Great. Okay, let's get into it. So obviously, I'm in real estate. I'm a real estate broker, and although I sell real estate, so I'm an associate broker here. When people are buying and selling real estate, there is a lot of taxes involved, or potential tax implications involved. How do you advise them not to lose money on the tax side?
I think you have to do that on the buy side for sure.
Obviously, you make money on the buy. True.
Real estate's an amazing investment opportunity, but if you just go and spend too much, it's not going to work for you. And I want clients to come talk to me before they buy, especially I see clients a lot of times trying to buy a building for their business. Mm-hmm. And I want to talk to them first. How does it need to be structured? What entity structure? Who owns the building? And how is that going to work? And we like to plan that ahead of time before they start the buy process or the build process. And when you get into that, then once you buy, if you're buying a building that needs to be rehabbed, for instance, there's so much to do. Or even if it doesn't need rehab, you can do cost segregation. And if you're a real estate professional like you are and spend more than half your time and more than 750 hours a year and follow all those rules, you can deduct all of that as 100% bonus depreciation in year one. It's giant tax benefit, especially if you have other income that's not passive income. It's active income, like, my income from running the CPA firm. If my husband were a real estate professional, we would be able to deduct all of the cost segregation losses from our real estate investments against our ordinary income.
Cost segregation is something that is a very hot topic, hot word now, because I think it's also in the big, beautiful bill. I think there was they extended it. It came up, I think, in the last bill that last time Trump was president. And then I think it was on a way of being phased out, and now I believe they extended it. So it's not always beneficial. It's not always beneficial to someone to use cost segregation, correct?
Not always, but a lot of times it is. It depends on what the law is at that time. Like bonus depreciation has been phasing out. And last year, I think it was only 60% you could take on bonus depreciation. Anything purchased after January, some date 25th or something this year is subject to 100% bonus depreciation. So it's now a huge benefit.
Sure.
If you don't use cost segregation on commercial property, that is depreciable over 39 years. It is so long. And so you're not getting so much tax benefits unless you can take a lot of that up front.
Right. Yeah.
And land is depreciable at all.
Yeah. You do the acceleration. This really, again, it comes down to whatever that individual investor's situation is. And obviously getting good advice from someone like yourself in the CPA world or the tax advising world, you want that advice. You want that person to come to you, say, "Hey, Nancy, what's the best options for me here? And do I do this? Do I do the bonus depreciation? Do I take it now? Do I take it over the time?" Obviously, you have to look at their situation and see where it's applicable and where it makes sense for you.
Yeah, and we can do tax planning for them to see what that looks like and make those decisions before they purchase the property. Because once you purchase it, you've done it, and we want to think about how this should be structured first.
Okay, great. So there was something, I don't know if this is what you came up with, is why making money doesn't always mean keeping money.
I see people that have giant amounts of revenue and then they have losses at the end. And real estate, that's pretty common. Sure. In regular business, that's a bad sign. Oh. Yeah. But we want to make sure you make money. So if you're buying a property, and what are you going to do with it? What is the plan? There needs to be a very detailed plan laid out as to how you're using that property and what it's for. Is it for your business? Is it for investment? Are you going to be renting it? Right now, I think there's a glut of single family rentals. So apartments and stuff aren't always full because so many have been built lately. So what does that look like? You can't look at 100% occupancy and count on that when maybe the market's at 90% occupancy right now. Yeah. So those are really big factors to take into consideration.
Yeah. The rental market, if you look at the stats for they just released stats, you're showing that there's a decline nationwide in the pricing of rentals, but still expensive no matter what. It's still more expensive than it was 4 years ago or 5 years ago, especially before COVID, because obviously COVID rocketed everything up along with inflation. People, especially you see it in our state, in Florida, where the values have gone up and the rents have gone up at the same time. And just because of people coming in, the influx of population. But getting back to rentals is, yeah, you could be sitting with a rental apartment or a home that sits vacant, could be sitting vacant for a few months. And then that piles up a losses for the ownership, obviously, because your expenses do not stop, obviously. You still have to pay the taxes. You have to pay the insurance for the property and whatever else, electric and water bills and things like that. So those pile up.
Yeah. And if you're not a real estate professional, your losses that you can take against your other income are very limited,
Yeah.
depending on what your income is. So they might be suspended until you sell the property. So you might not even be able to take advantage of the money you've put out of pocket keeping this thing going. So it's really important to analyze before you buy. Don't just take somebody's word for it.
So like you said earlier, your husband's getting to a point of retirement. You want him become a real estate agent. So that way, that makes sense for you because you have obviously real estate investments, and now you have someone who's going to be working. It could be working whatever 100% of his time, or they're in the business. That helps obviously you and the investor right now. As again, this is also good advice for other investors in the business in this real estate world, how to maximize those. If you have losses, how to be able to use the losses for your own for your taxes.
Yeah, and you don't have to be a real estate agent or broker to be a real estate professional.
It helps.
Because he would not want to do that. He would only want to be the real estate professional, which means we would have to buy an apartment or an office, another apartment or office, and manage that, rehab it, manage it, and spend all of his time on that. And that's a viable option if you're retired.
Yeah, no, it's even when you're not retired. I'm a little bit a ways from that myself, but anyway, let's get back into it. You talk about making money and growing your wealth. And obviously people have different relationships with money in their lives. And it impacts themselves obviously personally, but also impacts their business success. How do you teach or guide your clients in this world?
That's so funny you asked, because we have a book coming out in January called Tame Your Money Monster, because we see
hang on, let me write
Tame
that down.
Your Money Monster. Because we see people mismanage their money all the time. I get people that make giant amounts of money, but they live a lifestyle that's bigger than what they make.
Sure.
And so they end up in very big trouble very quickly. Or you have people that have a very low money mindset. Maybe they're not listening here because they're not real estate investors, because they don't believe that money's abundant. So it's all over the place with that. And we do try to manage our clients' mindsets. I have conversations with them and teach my people to have conversations with them about taxes, for instance. Business owners look for every deduction.
Yeah.
And so it's funny, because when you look for a tax deduction, you're spending 100% on whatever you're buying for that deduction. So don't buy that unless you really need it, because the tax savings on that is much less, 100%. So if you didn't spend the 100%, you would keep most of that and pay only 25% or 30% in taxes. See what I'm saying?
It's obviously I run myself as a business, as a PA. I get paid through the PA, and then I pretty much take most of my business expenses and pay for whatever through there. But sometimes you're like, am I missing opportunities to use as a business, something to use as a business expense? Because sometimes we're not as educated. No one's like, here's your PA. Now you have this business account. You have a business account, and now you're like, oh, how am I supposed to pay myself? No one teaches you that. No one teaches you.
We do.
That's good.
We teach our clients. That's a very big deal in our office, because you are not born knowing those things. And I see business owners all the time. They're like, I should know this, but I don't. Why would you know that? Nobody told you. There's no teaching of that in business school.
No,
you're not going to find out unless you talk to your CPA. And so I feel like it's our responsibility to educate that client on not only what structure to have and what you can deduct and what you can't, but to ask questions when we're doing tax prep about, did you have this? Did you have that? Did you have that, based on your industry? And because we do it all. So we see all of that, and we know to ask. For you, it would be mileage. What's your mileage? Or are you depreciating your car? Let's talk about the auto expense deduction.
I'll tell you right now, no, that's me. No, I know I'm not. And I know that's something as a real estate professional we can do. We can obviously itemize the car, our mileage. That's something we can keep track of. And there's ways to, if you're leasing your car or own your car, there's ways to depreciate that or take that off your taxes. I know one famous way that a lot of agents and real estate professionals were doing. It was if your car was X amount of pounds weight wise,
over 6,000.
you were like, oh, it's classified as farm machinery somehow. But that's tricky too, because you got to be you have to be careful about how you're doing that. And again, I've never done it. I'm sure my car weighs more than 6,000 pounds, but
You're taking a mileage deduction then. No, you depreciate your vehicle. Okay.
I'm leasing it.
Okay. That's fine too. Yeah. You have to look at the cost benefit.
Yeah.
There's different, and talk to your CPA about it, because they should be willing to have these conversations.
I like what you're saying there. Is like they should be willing to have these conversations. And this is again where it goes to hiring the right professional to help you or assist you in these things in life. Look, you go to your doctor. You're not going to a throat doctor for your knee. You're going to that specialist, an orthopedic surgeon, right? You're not going to an orthopedic surgeon for your heart. You're going to go to a cardiologist. So hiring the right professionals in anything you do in life, you want the right people, and you want someone, like you just said, have that conversation with you, saying, hey, what are you doing? You're planning your taxes or coming up with a strategy for your tax planning. What are you doing? And most people, like you said, and I'm guilty of it too, I don't know. Most of the time it's like, I don't know. I collect stubs, I collect receipts, and I figure it out at the end of the year, try to figure out what to do with it. So again, it's getting to, like you said, you have to be willing to ask those questions, or have someone who's going to ask you those questions and guide you.
I'm glad you're talking about this, because it's a pet peeve of mine. You really need a CPA on your team. If you're growing, if you've got a business, if you're growing, you need somebody you can call and ask for advice or get strategy from, or, when they're doing tax prep, they can educate you and pay attention. Right. You don't need to know everything, but you need to understand, because if you're signing that tax return, you better make sure it's right, because that's agreeing with it from an IRS point of view.
100%.
And so if there's something on there that's really not right and looks funny to you, ask questions.
I like that. Don't be afraid to ask the questions. Or again, it just goes back to who you're doing business with, or who you're hiring as a professional to help you, because these are things that matter in life. With your company, Fixit Accounting, you've built it up from the ground up. How do you resiliency in business? And like, obviously everyone who has in the business world, they want their business to grow and succeed and be resilient in all markets and all types of economic downturns, upturns, however it goes. But there's setbacks always. How do you help those business owners? And when there's setbacks, there's financial challenges, and there's the IRS knocking on their door, hey, we want our money. How do you help that, and then navigating those issues?
Yeah, they just need to call me, and we're always willing to help. And but that's the biggest problem. They don't call. They're embarrassed, and they think they're the only ones. And oh my God, I can't tell anybody that I'm doing this. But the only way to solve a problem like that is to open it up and feel like, here, I have a problem. And that was true for me too, because I woke up when I was 45 years old and realized I was divorced with 4 small children. Wow. I got $100 a week in child support, no job, and $650,000 in debt. And so I had to navigate that. And the only way that I was able to do that was to finally open up and tell somebody where I was. And a friend of mine that's a real estate attorney, she helped me with the beginnings of it. And once I got one thing solved, I was able to baby step my way through the others. But you have to talk about it. You have to find somebody that can help you and guide you. That a CPA is a perfect person to do that. I can't really speak for other CPAs, but I know that I've been through a lot of stuff. I've seen so much, and I guide clients for how to file bankruptcy, who to call, how to navigate the IRS, how to whatever it is that they're facing. Divorce, the husband ran off with all the money. We've just seen and heard it all. And we become therapists, because once people open up about their money, they now open up about everything else too.
Absolutely.
So we hear all of it.
I see it. Yeah, you talk about therapists. I see it on my side of the business also, because they go, agents have to be therapists too. Yeah, we have to, because we're traveling that emotional world of purchasing or selling your especially those of us on the residential side. Selling a residential property or buying it. It's an emotional process. Whereas if you're doing something on the commercial side, it's more numbers driven. Obviously, it's more black and white. Whereas in the residential, it's a lot of gray. It's a lot of gray area you have to traverse through, and you have to be delicate at times, but also something you have to get ahead of it. You have to ask the right questions. Hey, what are you looking for? And like you're saying yourself, you're asking the questions. And then obviously the person opens up and says, here's my book. Here it is. I saw somewhere in your bio, you help a lot of women with their either planning or becoming successful in business or tax planning, things like that. There's different mindsets and in the business, risk taking, things like that. How do you help women guide them through this business world and get them, if they're in if they have a business or they're starting a business or they just need tax help? How do you get them? Because I think that's maybe the women are not as open or willing. They just not. I don't want to pigeonhole, but it seems that a lot of times there's no service, or maybe it's an underserved group.
It is an underserved group. And that's one reason we chose women. We are women, and I just like women in business. So
Right.
that's a different brand from Fixit Accounting. We
Okay.
have an educational platform and a community for women in business, and particularly those just starting out, because seasoned women in business don't need this stuff. They're really good. They know what they're doing. They
Sure.
found their tribe. But
Right.
newer women in business need a lot of guidance. Anybody in business needs a lot of guidance. We just chose to speak to women, but it's good information for anybody, just honestly. And we have online courses, and we've got this book coming out called Tame Your Money Monster, along with an accompanying course. And so I think a lot of women that I talk to anyway, are going through this evolution. They were staying at home with their kids, or they were
Sure.
doing the job, trying to put money on the table or food on the table while they had children. But when they're coming out and their children are graduating, going off, they want to do something else. They feel they need to contribute. And so they're trying to find their way through this. And we are addressing that issue.
That's great. And kudos to you, because obviously you also have your like you mentioned earlier, you have your own personal experience having gone through divorce and being in a financial situation. And now obviously you're able to help educate as well and help guide. Yeah. And look, one thing about starting your own business or getting into the business world is tough. To be an entrepreneur is not easy, but you have to be resilient as an entrepreneur, but also having someone guide you is helpful. Because maybe I don't want to go back to myself. When I started, at least, look, I had family in the business, but when my father was like, you go figure it out. You're going to figure out the business. But
He didn't help you?
But I was lucky when I got into the office I started with, there were some people there who were like willing to help me, or willing to take the time to say, hey, here, this is what you do. This is how you do it, which I think helped me. And I appreciate that help. And I think when people get that help, we're helping others in business. Let them great. Let's get everyone to be successful. Not everyone's going to be successful all the time, but let's help build the success for people.
I think that's so important. I'm glad you mentioned it, because my ex-husband and I failed at 5 businesses before I started Fixit Accounting and became successful here. And then we've got three other successful businesses too. I think it's important to mention we failed at those because we had no mentor. We did not reach out. We did not ask for help. And the result was failure. And I just can't emphasize enough how important it is to have a mentor in your life, no matter what you're doing, whether it's real estate or any other business. But I also wanted to mention that my transition and my wealth now, Fixit Accounting does great. All of our other businesses do great, but the real estate part of our business has been very instrumental in our net worth.
Look, I like that, what you just said there, because real estate is helpful and has helped your net worth. And this is something that I don't think people fail to remember or they don't realize that most successful people and the most millionaires have been due to real estate. That's it. Owning real estate, building it, whatever it is, that has created the greatest wealth in the world, not just America, but everywhere in the world. When we talk about the American dream, owning a home, yeah, that is the American dream, but also beyond the American dream is building wealth for yourself, and owning real estate is the best way. And the growth may be slower, but at least you know where it is at all times. It could be speculative, but it's not like throwing your money on the roulette table. It's a lot. Right. It's still safer. You could have downturns, absolutely, and you could have vacancies and things like that. But more often than not, you're going to be ahead of the game, and you want to create wealth and also income. You can create income for yourself too by just having rental properties. They call it mailbox checks. income or whatever you want to call it.
That is my favorite thing about real estate. We get mailbox money.
Mailbox. That's it. Mailbox money. But so we're jumping all over the place, but we've gone through, obviously, when a real estate investor is buying real estate or whatever it is, do they often underestimate their tax exposure here, or are they overestimating their tax exposure?
They don't think about that.
Okay.
Yeah,
I
it's
like
just
that.
like not a thing. I don't see people asking these questions ahead of time, and I wish that they would because it's so vital, but they don't always understand what it means. So I've got a client now who has a piece of waterfront property, and he can sell it to somebody for, say, $300,000. But if he went and spent a few $1,000s to change the zoning, he might be able to sell it for $600,000.
Sure.
I was like, don't sell for 300. Let's go for the zoning.
That's good advice. Yeah. Again, that's hiring the right professional to advise. So there you go. That's another example of it. And this is something I'm guilty of, and I'm sure many others, is mixing our personal and our property finances together. How do you advise? Yeah.
It makes the accounting for that so much more simple and less expensive. If you want to have an expensive accounting bill, push it all together. If you want to have it less expensive, please keep it separate, a separate account, maybe not for each rental, but for sure being able to identify which expenses and which income goes with which one, even if you have to do a spreadsheet with it, please.
And I guess that also goes back to planning the correct type of entity structure that you're going to hold the property in. Is there a preference you would advise your clients as far as the entity structure? Is it just LLC or trust? How do you advise on that?
Okay. I never want to see a property in an S Corp status. Okay. Always in partnership or a sole member LLC or the individual's name. If you're buying single family rentals, the answer for me, I am not an attorney. I'm just telling you from a tax point of view, put it in your name. It makes it simpler for mortgages, for insurance, for all of that stuff. It needs to go in your name, and then it gets reported on your Schedule E of your Form 1040. You don't have a separate business return. It's just a separate schedule.
Okay.
So I think that's really important to mention. Like if you're buying a commercial piece of property for a business to inhabit, on the residential side, you have to have really great umbrella liability coverage. So you want that coverage. So if somebody tries to sue you, if they fall down on the driveway,
right,
they want to sue you, you have that umbrella liability coverage. If you're on the commercial side, if you're buying a place for your business to be in, you certainly need a separate entity for that piece of property if it's commercial, because that's completely separate. It's a whole different ball game with commercial versus residential.
So when investors, especially on the real estate side, we all have a mindset when going into the deal. How do you help? We got to separate the emotions from numbers, which I mentioned earlier. On the residential side, it's all emotions, and whereas in the commercial side, it's mostly numbers. But how do you help separate that, especially from an investor point of view?
I'm guilty as the next person of getting emotional about a property.
Okay.
But really, my advice is never be emotional about a property unless it's going to be the home that you are going to live in. I can see that for sure. But if you're an investor, you can't be emotionally attached to any property because you'll pay too much money for it. And
100%.
It's just not fair. You're at a distinct disadvantage if you're attached.
So this goes back to, was it fear-based decision-making process? Yeah, and then also having to think long-term instead of deal by deal. So again, you sit down with them and say, hey, look, this is what the plan should be going forward, because you want to help them achieve a success, but you also want them to not be making decisions based on fear or emotions again. And you help them put that long-term plan together on this?
Absolutely. I love to talk about this stuff. It's my favorite thing. It's my hobby, real estate and business. I just enjoy it so much.
Right.
So I always ask the question, what are you looking for and where do you want to go? And where do you see yourself in 10 years? And how do you want this to look so that we can structure a plan for them that will work with their finances and their goals. So they can do. I'm just the person providing information and offering suggestions.
There's also, for investors, there's enough time to buy, refinance, and sell. So I came to you and said, hey, Nancy, I got this piece of property. I've owned it for a little bit. I don't know if I should sell it, hold on to it, or refinance, or whatever. When I sat down with you, what were you looking at? to make a decision, help make a decision?
I would look at how long you've held it, how much money you have tied up in it. What is your equity there that's being held? And if you can refinance and get some of that out, that's great. Or if you have to sell to get it, because you don't want your equity sitting there not making you much money. There's calculations we can do that really help with that to figure out what that looks like. And I'm guilty too. I've got a piece of property we've held too long. So
Happens.
but sometimes it happens, and maybe it's not the right time to sell it. So you choose to do something different. But a lot of people have lower interest rates too, like
Which is hard to give up.
before COVID.
Right.
Yes. If you've got that, you might want to consider keeping it. But what does it look like if you sell and get something else at a higher interest rate? Can you sell into something that's bigger that produces more cash flow?
Sure. And there's obviously there's some tax planning involved in that too, depending on the size of the deal or type of deal. You have different, you have the tax code does allow for 1031 exchanges. There's a couple of different vehicles within the 1031. You could do a Delaware sales trust or although there's deferred sales trust, but there's also the Delaware statutory trust, whatever they call it. I think that's right. Which is within the 1031 exchange, but it's different from actually owning the physical property, whereas you are now an investor in a JV or your partners in that rather than owning the physical, you have a piece or you have shares, or however you want to call that.
Yeah, you have a partner in a partnership likely.
Right.
Yeah.
How do you help people become successful as either entrepreneurs or a landlord? Do you sit down with them on a monthly basis? Do you do reviews with your clients? How do you help them keep pushing forward and get to a point where they're obviously successful, but also they're scaled up and they're doing really well in life?
That depends on their need and their willingness to pay for the advice. So some people just don't find it valuable. They just don't know what they're missing. And other people are like, all in, let's go. And so we do meet with them once a month or once a quarter and try to look at what they're doing and really help. I enjoy that. That's my favorite thing to do, much more than the compliance work. Although we do probably hundreds and hundreds of tax returns every year, lots of bookkeeping.
And do you sit down with your clients on like beforehand, even say, hey, let's do some planning, let's do some strategizing before we even start, even before I prepare your taxes for next year? Sit down.
Our service clients all get tax planning.
Good.
So we're in tax planning season right now. So after third quarter results are in, the accounting department starts sending the tax department all the files, and they start doing tax planning and meeting with the client. What does it look like? Is it the same? What have you done? What are we going to do? So we can see what they're going to owe. And if they need to buy equipment or spend some money before the end of the year, if they need something, we don't encourage them to do that if they don't need it, because that's a waste of money.
Sure.
But my brother, for instance, his business needs a truck. They've got a lot of profit. They need a truck by the end of the year. Please buy it and put it in service before December 30th.
So you get the benefit of the taxes for this year, not for next year or whatever. Take advantage of it now. When you're dealing with, especially, I guess, any of your clients, but entrepreneurs, business people, what's some of the biggest money mistakes that at least someone in the small business world makes often?
Yeah. They hire very expensive consultants that they don't need. I had one just recently. I spent a few $100,000 for EOS, and they're not near about big enough for that. And then there's the ones that are starting to be successful and the money's starting to flow, and then they go buy a big house and a big car. And they have all this big obligation, and they're robbing the business. And I don't suggest doing that. Leave your money in the business, because that money will help your business grow.
Right.
So don't take it all out for personal use. It's just gone.
Yeah, it's a mindset. It's a mindset.
It is a mindset. And they want to be the big guy in town, but you just can't unless you're, much bigger than that. So don't try to be something you aren't. Don't try to keep up with the Joneses. It's just
there's something to be said about being, even though you can afford it, but to live below your means. Because that way you still have, like you said, your business will have money in the bank for it. And you'll also have money in your bank to prepare to fund whatever lifestyle you want. But you also, like you said, you don't want to go crazy, and because it just puts yourself in a hole at the end of the day, right? You're going to be in a hole. Your business is not going to succeed. You're going to be in financial straits. And that's not something that's good for anyone. Talk about emotions at that.
It causes so much stress, Matthew. Right. It's so much stress. Oh, I can't even tell you. And I just had one guy who had this incredibly brilliant business idea, and he had to file bankruptcy, personal and business,
That's too
because
bad.
it was so sad to watch. So sad. So don't go there. Always live below your means.
It helps. It definitely helps. So that way you have money, what they call a rainy day fund,
Yeah.
you'll be okay. Maybe you don't get the Cadillac, you get the Chevy instead, and things like that. But look, you should enjoy yourself, but don't go crazy. That's really what that's what you're trying to impart to people out there.
Yeah.
That you,
And for my children, I'm always teaching them these things too.
That's good.
Because you have to live below your means, save your money, invest while they're in build mode.
While you're young.
And when you're in build mode, you really have to watch everything.
Yeah. The last thing you want to do is you get older in life, it becomes much more difficult to do those things because either you have other responsibility, you have family, things like that, or you got to a point where your earning potential is not what it was when you were 25. Now you're much older. Your earning potential your time is shrunk, unfortunately, and it gets a lot tougher. I say one thing to people is, look, I don't mind necessarily spending the money on something to go do something or learn about something or go research, go look at a property somewhere else if it's not in Florida. But what I don't have is the time. I can't get back my time. The time I can't get back. That's it. So you want to learn, do things, especially planning in life, especially your financial plan. Do it while you're young. People, trust me. You don't want to. You don't want to be later in life and say, "Oh no, why didn't I do this when I was in my 20s or even my 30s?" Sometimes even to your 40s, you still have time, but do it sooner than later. That's for sure.
Build good habits while you're young.
That's it. Yeah. Build your good habits. And again, those are something those have to be teachable. I think you don't pick them up just organically. There has to be someone who's shown you the way to do those things. Either it's your parents or it's someone like yourself. I got a really good CPA who's put me on the straight and narrow in life and showed me how not to spend money stupidly and more or less wisely. And now hey, great. Or you get good, like a CPA, a good financial advisor, things like that. These are all things you want in life to help you build your wealth and abundance, like you said earlier. So get a good CPA, folks. Get a very good CPA to do your thing, help you. Get a good financial advisor, and also get a good real estate agent. Yes. That doesn't hurt.
Real estate professional, real estate broker is worth their weight in gold. I just want to say that.
Thank you. Thank you for saying that. There are many out there who don't think it's worthwhile. Unfortunately, there's a couple of attorneys out there who really think we're not worthwhile and have made our lives a little more difficult, but we get through it. But yes, I think there's something to be said for the brokers and the agents out there who, look, we honestly, I don't want to get into it, but again, we do help a lot. I think we have good, I think those of us who have been in the business for a while or even new in the business who can give good advice and guidance, worth their weight in gold. It's worth everything. It's just to take that little bit of stress off of someone who's going through the process of buying or selling or even renting. Same thing. There's stress there. Trust me, I'm looking at my emails and I'm doing a lease right now and there's a constant back and forth on the lease. And I'm like, you guys, I get through it. But this is where your advice comes in. Like yourself, having someone good to keep you out of the jackpot with IRS especially and keep money in your bank and help you grow your business and grow yourself personally in life. These are good things to have. Just to put a bow on all of it, tie it all up into a nice, neat bow, give us some final parting words of wisdom and how we can find you. Also, how someone say, hey, you know what? I really like this Nancy. I need her on my team.
Yeah, you can find me at fixitaccounting.com, Fixit accounting.com, because we do fix lots of problems. And at successyourway.com, which is our other brand for the newer women entrepreneurs. But my biggest advice for real estate investors is really keep your eye on when you're buying, buy right, and then monitor your results. Always monitor your results.
I like that. Also, don't forget your book that's coming out soon.
Yep. Book's coming out January 20th, along with a companion course. It is called Tame Your Money Monster.
And where would they be able to find that?
Amazon.
Let's get her up on the #1 charts on Amazon.
Yeah, let's do it.
All right, Nancy, it was great. Nancy Benet, thank you for coming on with me. Happy holidays. Also, good luck in the upcoming tax season. That's coming up. It's quickly coming upon us as soon as the calendar turns. And remember, people, get a strategy going. Plan. Don't wait for the last second. If you need a CFO or you just need a good CPA to help you guide you through these things, give Nancy a shout. I'm Matthew. This has been the Property Playbook. And thank you for joining us. And also give us a comment, subscribe. We definitely appreciate all that. Thank you. That's it for today's episode of the Krinzman Property Playbook. I hope you've gained some valuable insights and feel inspired to take your next steps in the real estate game. If you're ready to make a move or need expert guidance, let's connect. Whether you're buying, selling, or looking to invest, I'm here to help you navigate the South Florida market with confidence. You can reach out to me directly through my website or on social media. Let's get the conversation started and make your real estate goals a reality. Thanks for tuning in, and I'll see you next time on the Krinzman Property Playbook.